Morning, guys. It's Monday, May 12th, 5:24 a.m. Central Time. Grain markets are mixed to higher this morning. July corn futures up 3 cents at 4.52 3/4. July soybeans up 16 cents at 10.67 3/4. July Chicago wheat down a quarter cent at 5.21 1/2. July Kansas City wheat up 1 at 5.18 1/2. July spring wheat is down 2 cents at 5.91 1/2. We have some breaking news out of these U.S.-China trade talks this morning. Let's start there.
So, the US and China have agreed to lower tariff rates for 90 days. The previous 145% US tariff on most Chinese imports will be reduced to 30% beginning on Wednesday, and the current Chinese tariffs on US imports will drop from 125% to 10% on the same date. Treasury Secretary Scott Bessent said that neither side wants to decouple and that a robust and productive discussion on steps forward on fentanyl occurred. Bessent also mentioned that the talks may lead to purchase agreements by China. The White House called the agreement a trade deal, while China said that a consensus was reached.
Yeah, the language out of either side was slightly different. Although that stuff, the trade deal and then the consensus, that was before the tariff pause was announced. So this is all kind of happening in real time. I think this is the best case outcome from these meetings. You had a meeting that lasted, it was what, a 2 or 3 day meeting. I don't think that the idea of reaching like a full comprehensive trade deal in that short of time, that's probably not realistic. But the fact that we got to a place where they're going to pause or drastically reduce tariffs for 3 months is very, very good. There was some differing reporting with regard to what Scott Bessent said. The Bloomberg piece that I read early this morning said the words purchase agreements in quotes specifically, meaning like, hey, maybe we're setting up for like a different version of the trade deal that happened last go around. And then Bloomberg changed their article and they removed that part of it. And they simply said that the talks may lead China to buy more American-made products. So with specifics, we're kind of lacking here. But again, I think this is very, very good in terms of what could have happened over the weekend. The markets like this. Some markets like it. Soybean futures are higher this morning. This is your July soybean contract. It traded up above those highs from late April. I believe if you're friendly to the soybean market, you would like to see this thing close above this 10.67 level today. The November chart looks even better to me. We talked about this coiling pattern on Friday with Brian, and it looks very clearly like we've broken out of that coiling pattern. You've got trend resistance above Nova Beans at 10.53. So this market looks very good. Outside markets have reacted. The S&P 500 is up 2.8% this morning. That's a tremendous move higher. The Dow Jones is up almost 1,000 points. The S&P has now rallied 21% from the low that was posted on April 7th. That's a huge move. I believe Trump called Liberation Day April 2nd. And if you look at what all these markets, you look at the S&P, April 2nd was damn close to the low. Soybeans have rallied sharply since that date. So we've very much erased really any of the losses associated with Liberation Day and the increased tariffs, that sort of thing. So if you're a farmer and you're looking at the markets, I'd say good news this morning. Now, one thing that is of note, corn futures aren't doing much. They're up a few cents this morning. Wheat futures, Kansas City futures and SRW futures posted fresh life of contract lows overnight. So I think that China buys a lot of soybeans from the United States, and maybe if we can reach a deal, they continue to. I just don't know if that corn or wheat is interested in this right now. But who knows? Bessent, whether he said purchase agreements or not, maybe you get to a point where those products are included, but we're just not that far along. We have a additional story on this.
We sure do. The trade war appears to be impacting portions of the U.S. agricultural sector by disrupting trade, delaying equipment purchases, and limiting imports of key agricultural imports such as chemicals. In response to tariff threats, importers have adopted a more cautious last-minute buying approach to U.S. grains and oilseeds, further disrupting global grain flows. Tariffs have also limited imports of fertilizer and pesticides. Meanwhile, Brazil is emerging as a key beneficiary to the US China trade tensions as China redirects its demand for commodities such as beef and soybeans toward the South American nation.
We threw this article in this morning because it was making the rounds over the weekend. And I feel as if part of the article is opinion. I almost feel as if part of it is like a Trump hit piece. Like, let's make Trump look really bad here. I'm not an expert on a lot of the things that they mentioned. Like they're talking about chemicals. They're talking about Grain flows, I guess I understand. Fertilizer and pesticides, I'm not an expert on. With regard to the markets, you go back to those soybean charts and we're drastically higher than where we were on Liberation Day. You could make the argument that, the market had a lot of negativity. The soybean market in particular had a lot of negativity priced in shortly after Trump was elected, knowing that these tariffs were coming. When it comes to actual like trade of corn and soybeans and wheat, soybeans are the big one. And we've shown you guys this chart before. This time of year, it's May 12th. China is done with old crop U.S. business. And some years they'll begin new crop U.S. soybean business this time of year, but some years they'll wait a few months. So I guess if there was a good, put the word good in air quotes, if there was a good time for this to happen with regard to U.S. soybean demand, this is probably the time slot that you'd like it to happen. The worst time for it to happen would be like, during harvest, like right before we're about to ship a whole bunch of beans to China. So hopefully, you reach a consensus. They actually do get a comprehensive trade deal. Best case scenario would be that Bloomberg was correct with their purchase agreement quote, and that there is some sort of purchase agreement and that China comes in and buys a whole bunch of grain. That's taking many steps forward, but I think the news this morning is largely positive.
USDA will release its monthly crop production and WASDE report this morning at 11 Central Time. The report will include our first look at the new crop balance sheets for both the U.S. and the world. USDA will use the March acreage numbers and trend yields in its initial look at the new crop at the new crop corn and soybean situation. The new crop corn situation in particular is expected to look bearish compared to the current marketing year.
So we could be very quickly back to reality at 11 a.m. Central Time. First off, these tariff headlines, I mean, yeah, they look good an hour or two after they were published. Could this all be a knee-jerk reaction in soybeans and in the stock market? Could you come back and finish lower today? Sure, you could. Anything could happen. With regard to the report, let's start with the old crop. You should see a tighter corn number. And I don't know if they're going to come up with exports or not. I think that they should. Some people have argued that maybe they're too high with feed demand. I don't know, but I feel like that number should probably come down just a little bit. That's what the trade expects. We're not expecting much for old crop soybeans and wheat. New crop, what USDA will do, and remember, these are projections. They're trying to guess basically. And is it an educated guess? Maybe you can call it that. They're trying to guess what's going to be left over in the United States on August 31st of next year. The trade thinks that projection will be somewhere just north of 2 billion bushels for corn, 362 million for soybeans, 863 for wheat. For corn and soybeans, they're going to start with trend yields. They're going to use the March acreage numbers. They're going to use what they consider to be normal-ish demand projections, and they're going to spit out numbers. So these shouldn't be like game-changing numbers. This is just a place to start. Remember that weather is the biggest thing in determining yield. We haven't seen summer weather yet. We still don't know if the acreage numbers are real. We'll get a better feel for that in June. But this is a starting point. We'll kind of skip over the world stuff. We'll talk about that tomorrow.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Talked about corn and soybean seasonal information on Thursday last week. And people talk about seasonals a lot. I feel like I go a little bit more in depth, perhaps, than some people do. And I had some important seasonal information about the markets that I think you should be aware of on Thursday last week. This was a short, quick video, but was very valuable, I'm told. Today, we'll have a USDA snapshot video, as I always do on report day. These are usually out within 10 or 12 minutes of the report. I tell people 20 minutes just to stay safe. But if you're looking for a quick, like 3-minute, hey, this is what you need to know about the reports, you can go about your day afterward. That's what this is, and that'll be out shortly after the report today. If you want to see the premium stuff, guys, remember this is the best way to support what we're doing here. We don't make any money on the podcast or on the YouTube channel. This is a big loser for us, but the premium subs keep us afloat, and premium subs, we're super happy to have you. If you are seeking independent and non-biased grain market information, you should check out what we're doing here. All of our headlines, graphics, charts, cash grain marketing recommendations included in the 5 a.m. Central Time email blast. We do our daily video blast, which is a new premium video every day at 10 a.m. Central Time. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tries to sell you anything else. If you guys are busy this morning, you can sign up on your phone. It takes about 30 seconds. Give that deal a shot today, guys.
The U.S. Corn Belt was dry over the weekend. Rainfall was confined to the southeastern portion of the U.S. There is some scattered rain on the radar over parts of Missouri, Illinois, and Kentucky early this morning. Rain will begin to accumulate in parts of North Dakota, South Dakota, and Minnesota later this week. The same can be said for parts of the eastern and south central Corn Belt. The 5 to 10 day period brings rainfall into more of the Corn Belt. However, this morning's GFS leaves portions of Nebraska and western Iowa notably dry.
If you go out through the 16-day period, you do have quite a bit of rain. There are some notably dry areas, though. Western Iowa, Nebraska, Kansas, mainly dry through that period. I think that the more I hear from farmers, the more I understand that things are highly variable this year in terms of conditions. So if you're out east, you're in Ohio, you're parts of Indiana, Kentucky, it's been wet, and some guys are still waiting. Some guys are still waiting to get started. If you're in the West, I've been told, hey, planting is fast and furious, but it's really dry, and we're starting to get concerned. So it's highly variable. I know that the crop progress numbers would suggest, hey, we're ahead of schedule and everything's okay, but there are absolutely some little problems here and there, which is perfectly normal. To look at this through a more broad lens, perhaps, these are some very good maps from our friends at Crop Profit. Over the last 14 days, the Corn Belt has seen 72% of its normal rainfall. So you've seen the central Corn Belt in particular much drier than normal over the last 2 weeks, which has resulted in a fast planting pace. You look at the east, though, you look at Ohio in particular, it's been wet. You look at places like, call it southeast North Dakota, it's been wet. There's been some problem areas, certainly. Forecast over the next 14 days, we're looking for above normal rainfall in most areas of the Corn Belt, except for parts of northern Illinois, parts of what would be southwest Iowa, and then you get down into the southern plains, Kansas, Oklahoma, Texas. They're going to be dry. But if you get the crop planted here and you catch the rains, that's a pretty damn good start.
The funds substantially trimmed their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, May 6th, large money managers were net sellers of 57,000 corn contracts. Over the last 4 weeks, the funds have reduced their net long position in the corn market by 116,000 contracts. The funds were also net sellers of 17,000 soybean contracts and net buyers of 6,000 contracts of SRW wheat on the week.
Here's a chart of the fund position, net fund position in the corn market, and they had a small net long as of last Tuesday. As of Friday's close, the private groups believe that the funds were net short somewhere between 10 and 15,000 contracts. So there was some selling last week. So to begin a new week here, USDA report today, U.S.-China trade progress, the funds are actually net short, probably in real time, a small amount of corn. Guys, if you guys want to see the full version of the fund tracker charts, we have these in the Standard Grain Morning Update every Monday morning.
China's soybean imports fell to their lowest level in a decade in April. Monthly imports dropped to 6.1 million metric tons, down roughly 29% year over year. The decline was driven by customs delays and slower than usual shipments from Brazil. These logistical disruptions have extended transport times from the typical 7 to 10 days to 20 to 25 days, significantly hindering the flow of soybeans. From January through April, total Chinese soybean imports totaled 23.2 million metric tons, a 14.6% decline from the same period last year. However, imports are expected to rebound in May and June, with monthly volumes projected to reach around 11 million metric tons.
Yeah, I probably wouldn't read too much into this. This seems to be more of a logistics slash policy or just delay type thing, but it's not like there's a lack of supply out there. Brazil's got a monster crop that they're exporting. I don't think it's a big deal. I think that their imports will rebound. I will be interested to see, however, what USDA projects for new crop China soybean imports in today's report. We see our first official version of the new crop balance sheets, and that includes the world stuff. So USDA is going to take a stab at Chinese imports for corn, soybeans, and wheat for this next marketing year, which should be interesting.
We had some more flash sales reported on Friday. U.S. exporters sold 11 million bushels of corn to Mexico. Of the total, 4 million bushels is for delivery during the current marketing year, and 7 million bushels is for delivery during the next marketing year. Exporters also sold 4 million bushels of soybeans to Pakistan for delivery during the next marketing year.
Some new crop sales on the books. If I had to guess, Mexico will probably be the biggest buyer of U.S. corn again next year. Although who's to say what could happen with China? They can move the needle very quickly if some sort of purchase agreement, as Scott Bessent may or may have not have said, is reached. So we'll see what happens. What did cattle do on Friday?
Cattle futures were lower. Live cattle were 42 cents to 92 cents lower, with the exception of the June 25 contract that gained 42 cents. Feeders saw losses ranging from 95 cents down to $1.72, with the exception of the May 25 contract that gained 50 cents. Cash cattle trade climbed even higher last week in the Texas Panhandle. Cattle were $1 higher compared to the prior week at $2.18 to $2.19. Down in Kansas, cattle were steady to $2 higher at $2.18 to $2.20. Up here in Nebraska, cattle were $3 to $5 higher at $2.25 to $2.28. And then over in the Western Corn Belt, cattle were $4 to $5 higher, also selling at $2.25 to $2.28.
Outside markets, lots of movement this morning on the U.S.-China headlines. The Dow Jones is up 980 points. The S&P 500 is up 175 points, which is close to 3%. Treasuries are off, which means interest rates are higher. The U.S. dollar trades sharply higher. Crude oil is up $1.94 in the June WTI at $62.96. The gold market's down $128 this morning. Lots of selling pressure there. Have a great day today, guys. Remember, report at 11 a.m. Central. We'll be back on Tuesday.